We are coming upon many people's favorite time of the year. And yes, I am talking about the New Year interest rate predictions. We have heard from a lot of the usual key players like the Mortgage Bankers Association, Fannie Mae, and Zillow, to name a few. All of them do predict interest rates to range anywhere from 6.4 at the high end to 5.9 on the low end for 2026. All of that to say, interest rates are going to be basically around where they've been for the last few months. So, all of you that have been waiting for interest rates to come down, let me ask you, how long are you prepared to wait if it doesn't seem like it's going to change much from where rates are now? This applies to both current homeowners and prospective home buyers. Current homeowners might have the opportunity to save thousands of dollars a year by refinancing their mortgage from high rates when they bought to current lower rates. Remember, we're at levels that we haven't seen in approximately 3 years. So these homeowners are typically taking a stance that they want to wait for rates to come to an arbitrarily lower number because they want that additional savings to take place. But should you continue to wait with, again, thousands of savings available now, and refinancing today does not prevent you from taking advantage of lower rates in the impending future. And for our prospective buyers, home affordability has actually hit a 3-year high, and the opportunity to purchase a home in today's market looks a lot better than it has in recent times. Inventory is up and buyer leverage has improved. Waiting at this point is likely to do more harm than good, so do yourself a favor, accept where rates are, and get in the game to buy. The number of homes without a mortgage has increased significantly, with 40% of homeowners being mortgage-free, a new all-time high. Do you ever wonder how people got to this place of being mortgage free like I do? I believe that lots of factors have taken place, like aging population, historically low mortgage rates, and increased values have all played a part. The most common component of those being mortgage free is that they did not all start out that way. And in fact, the most common all cash buyers are not those who have come into a large inheritance, but in fact, those that have sold a property and now buying another one with the cash proceeds they received from the sale. That's right. They invested in real estate, waited, and then reaped the rewards. So if you want to someday also become mortgage free, you have to start by investing in real estate today. Fannie Mae removes the minimum credit score requirement for DU. That's right. You heard me correctly. Conventional loans do not have a minimum credit score anymore. Well, maybe. And before everyone gets too excited, let's break down some details. Conventional financing has long had a minimum 620 credit score requirement. But the reality is, for anybody with a credit score 680 and below, conventional financing was going to be difficult and very pricey based on the LLPAs. That's right, those stubborn loan level price adjustments, which are risk-based factors that investors look at to determine what price to give on a conventional borrower. The exceptions here would be those with a very low loan to value ratio, thus limiting said risk to the investors. So first, we have no idea if lenders are even going to entertain sub 620 conventional loans, but more importantly, how they plan on pricing those loans. This could be great news for prospective conventional home buyers, but I'm going to wait and see before I get too excited.